What's good, everybody? Hopefully, y'all had a great week for OPEX and an even better weekend. I know price action last week was a, bit of a hit or miss, but there was still some very good individual names that we were able to capture and trade out. So, without further ado and any hesitation, I'd like to go ahead and just get started. For this week, we do have around 15 or so names. Usually that's going to kind of be the standard for me, 15 or maybe a little bit more, and we're going to try and keep most of these weekly watch list videos under 30 minutes. So let's go ahead and get started. The first name I want to cover is Rocket Lab Corporation. And the reason I want to cover it is just because I'm a huge fan of that staircase compression that I like to talk about. And the reason being is because it generates a really nice form of liquidity if order flow continues in the direction that it's developing. So when we have something and we get an aggressive leg up, right? This is our sequential, our impulse move, our expansion displacement, whatever you want to call it. There's going to be a form where price has to redevelop, it has to base, it has to absorb. And so it'll get into a form where it just kind of does something like this, right? And then it develops. But all this is really doing is each time you create a lower high or some kind of wick, it's generating liquidity to get ran through. So the reason I like to call it a staircase compression is because you can run up this rather easily, right? Versus, let's say you have something like this. You're going to struggle to get through each of those hurdles. You're going to have to like jump, right? Basically struggle a lot more than this one, where this one you could just run right through it. And the reason I like to give it that kind of description is because when price is ready, if it's going to follow the general context of its direction, in this case, this is a bullish trend. We're getting some bullish absorption, and it'll just run right through it all because it's easier to run through this than it is to run through this, right? Path of least resistance is another way to look at it. So when I go back and look at RKLB, you can identify we have a really strong sequential here, a really nice impulse move up. So now price is going into that absorption phase. And it to me is a staircase based compression because there's not really any displacement that's aggregating price lower. It's kind of just all within a general range. And I do like when I go into the weekly because the weekly actually swept. So you could see that the weekly came in, swept our externals, and actually rebalanced a weekly inefficiency and kind of came back into the range. So it could kind of prolong this and stay in some form of development like this for a little bit longer. But just understand that when you start getting some daily displacement, so maybe some directionals, because you can still come in and sweep and develop even more. But when you start getting that initial displacement, so an aggressive candle, right, that leaves buyers or sellers, depending on which way you displace. So what I would like to do next is kind of dissect the hourlies. And so the 4 hour is showing some potential. You do have a minor aggressive candle here. So the way I would approach this is, can we develop above 43.15, 43-ish? Because this is showing some potential signs on the hourly where it could develop. Now, it did do it over here and it failed, right? So that's why you kind of just have to watch to see how it develops. It would be a lot cleaner if we saw some form of like directional on the daily that takes out like 46 and then holds. So for like a displacement scenario, you would push up and then maybe come back to reset it and then develop and then push higher. So be on the lookout for some form of hourly or daily displacement on this from that weekly inefficiency to see if we can put in some good lower time frame reversals to then get a aggressive sweep of our previous wicks. One of my favorite freaking charts, and it finally played out. This to me looks like it's in a reaccumulation phase, and I am a huge fan of this chart. Obviously, myself and the 8x trades and a lot of other members were part of this candle, and a lot of us hit 50 up to 300% returns. And I still think this development is not quite finished yet. And the reason being is because we have this yearly range, right? This yearly range that gets its manipulation sweep, but then look at the aggression out of it. So you go from a lower low, lower high to lower low to then higher high. So if I come back and oops, come back and draw this out. Let's get you down here so you can get a better visual. So we went from lower lows, lower highs to lower lows to then higher highs, right? And then what it looked to me was like a maybe a 3 driver, which usually are some form of accumulations where you go 1, 2, 3, and then to get the breakout, right? And what I like about it is it did all that within your discount. So not only did we get a higher time frame structural shift, we got a really nice compression based driver into our discount. So we were looking for that sell side until we absorbed enough to give us that fuel to get a really aggressive run into the context of the order flow. So that context of order flow is in an uptrend. So you can see the 1, 2, 3, and you can see how here once we finally swept the 2025 lows, we got an aggressive candle. So the question now is, do we get direct momentum or do we get a reset? And I would personally like a reset because the weekly did sweep an external and we did get weekly displacement. And I would personally really like for this to kind of come back, reset, maybe get some kind of like higher low and then develop into like the high nines, which is my target. Low nines, high nines. Pretty much basically what I said earlier about the stair step is like this is all funneled really, really tightly on the higher time frames. And you can see how price just runs through all those previous wicks because of how it was pretty much accumulating. There's not really like aggressive displacement down, you know? The trend from the higher time frame narrative is still up. And so look at how easily it just runs through because it's the path of least resistance after coming into an external sweep, a nice daily inefficiency, and our potential discount. So a lot to love down here. And it just ran right through it. So if this is going to carry out its momentum and buyers are going to favor the auction in this, I would like to see some kind of higher low that then delivers into the low nines, low to mid nines potentially. Really pretty chart. I love this development. I do own shares and options. Another one that's probably not really talked about is Circle. And I'm taking into account the weekly leg from IPO. So you got all that aggressive move, and then now you're getting that kind of internal build out. Remember, this leg, if it does work, within that retracement or pullback, you're going to have internals. You're going to have some form of different kind of structure that develops versus what you're seeing on the higher time frames. So keep that in mind. And we are coming into that discount zone, which I do like because it also lines up with our gap and a previous high. So we have a nice breaker filled with a gap. Now that we're coming into rebalance our inefficiencies. So a lot of things have been restructured, orders have been refilled. So if this is going to account for how it was developed, I would like to see buyers step in here. And a good form of confirmation, if you don't want to take it off the initial inside day, is this inside day can also set traps. You can also go for an external sweep that then comes back into the range. And if you come back into the range, I think it sets up for a really good reversal. Alternatively, if you get a push through 162.40, 163, then I think it starts to set up for a really nice run into 200. So that is Circle. I really like the potential on this from the weekly perspective. We are at discount and there is some pretty good confluence to pair with it. Next up is Tesla. And the reason I like Tesla is when I dig into the 4-hour. So Tesla did kind of shift the hourly structure here a little bit. And the reason being is you had a gap down, create some lows, right? You fail at the gap down, you create new lows. But then you push through that gap and you develop a breaker now. And so this breaker here, because the structure has changed, you did get a daily external sweep that also fell out of your trend line, which probably caused a lot of traps. But now you have good structure here on the 4-hour, and we can utilize this low to take advantage of how far back price can develop. So I will be keeping an eye on Tesla between 317 through about 326. So about a $10 window to see if we can get some pretty good development that starts to set up some reversals. And if that is the case, I would like to see that higher low develop because in this area, you also have the daily inefficiency, right? You do come into it a little bit more. I would like to see a little bit more reversal candles start to occur, but you can see the wicks are starting to kind of develop as we come into that breaker and the gap and all those other confluences on the 4-hour. So again, 317 through about 326, I am going to be watching to see if Tesla can kind of create some form of higher low to then maybe get one final push into the 360s, maybe even as high as 370s. I'm not entirely sure about that, but I do like the confluences that are starting to set up. So keep this one on watch if it continues to develop lower. Costco, I know a lot of are expecting, and this is kind of what I laid out for Twitter. Basically, what I'm looking for is development off this daily inefficiency. And you can see I like to come back to trades that have that initial reversal structure. So you can see where this reversal occurred and then the follow through after that. So I'm usually not one of a participant that takes advantage of that. Rather, I like to then address when price starts to retrace if we are going to, solidify the trend. I like to buy on pullbacks rather than buying on momentum. Because usually when you buy on momentum, you're already close to some kind of external, maybe a previous high, previous low. And I just don't think the risk to reward is as clean, right? Things will look bearish before they look bullish. Things will look bullish before they look bearish. And those two terms right there, those phrases are why I like to buy on those retracements. Obviously, the retracements have to have context, right? So what kind of trend is it in? Because that's the kind of the direction that I'm going to be looking for. So pretty much with Costco, you have that broadening low off the weekly, right? You had that LRLR sweep that cleaned up all of that because look at how it's trading out. There's not really any aggression to kind of prevent price. So the path of least resistance was to aggressively sweep. You come into your weekly discount, you push higher, set in a higher low on the 4-hour, then follow with displacement. So pretty much what I'm looking for is, can we get that similar buildup where you kind of dig into it and then start to trade out and kind of get that LRLR out here? And so I do still think as long as Costco can develop above the 950s, 955s, I still think it's a strong candidate for pushing back into the 1006, 1025 may even. Earnings are still a month out, so it could also kind of consolidate until then too. So something to keep an eye out, but this is a trade that I do really like, and it's just based off the context of how can we continue to develop within this 955, like 965 area. So about another $10 window, and I'm just going to be watching for daily reactions, 4-hour reactions to see how those sweeps are coming along. CRM, the reason I'm watching CRM is more so because of the 2-hour. We put in some actually decent structure down here. So when I'm looking at the 2-hour, right, you have this. And when I bring this down, you now have sets of higher lows and higher highs. And so this development could then domino into the daily. And that's why I have on the daily anchored fibs from the last swing point high that gave you those broadening lows. So this is an impulse leg down that we can now use as our swing high, swing low points to identify our range to address where price could retrace back into and continue the trend, if it is. And then the second thing would be identifying those potential reversals, which we use these smaller time frames. Because remember, it's a domino effect. You won't see the reversals on the higher time frames before the lower time frames. And you can use the lower time frames to kind of get a good understanding as far as, okay, structure trend a little bit here. Maybe it can then reflect onto the 4, that then reflects onto the daily, and then trickles onto the weekly, so on and so forth. So I like the 2-hour because we got a gap followed by displacement, a really powerful and aggressive candle that left orders unfilled. And I like how the hourly pushed in and swept these little internals here. So now my approach would be, okay, can CRM develop off this 2-hour to then get some kind of push into that daily inefficiency? Now, the only thing to keep in mind is this is daily displacement into a bearish daily inefficiency. So we did kind of tap into it, and you can see how you wicked off of it. So that's why the 2-hour and the 4-hour are going to be very vital in this, because if it does pull back from here, you want to pretty much address a higher low off of this displacement candle. This is our point of reference. If we do start to retrace, we want this area to pretty much hold to then trade higher. And if that does play out, excuse me, I do think CRM could be a potential for 250, 255 again, and this golden pocket actually lines up with a gap. So this could very well push up and then start to reverse back down. Excuse me. So keep an eye on this one as we did get a weekly range sweep and we are pretty much coming into a huge monthly demand. So the reactions down here could be very important to see what kind of trend this is actually trying to solidify. One of my favorites is Uber, and I've pretty much been tracking this for a while now. If I kind of hide all this out, we pretty much came into discount. The development of this leg was the same as the development of this one. If I copy and paste this trend line and drag it over, it literally fits in the same spot. And so now what I'm keeping an eye on is how does price continue to develop as we started to break out of that discount zone. So higher low, looking for a higher high. Pretty straightforward here, and the reason I have my standard deviation tool is because I took into account the manipulation leg and projected onto where price could push. And a lot of the times the minus 1.5 and the 2 are your targets. So I like how it all lines up with the previous highs. So I'm looking for good development here. You're also inside on the week, so that's really pretty. I like this weekly. You have confluence of a supportive volume imbalance. Price is pretty much kind of compressing here. So if we do get that aggregation that I'm looking for, I would like to see Uber within the duration into like maybe September, October. I would like to see this start pushing to the 97s, 100s area. Somewhere around here would be my target into September, October timeframe. ABBV. This one is a phenomenal chart. So 2-day price was pretty much being dominated by sellers since we had the aggressive move off of April. And ever since then, every iteration into that has failed. You failed, you failed, you failed, you failed, right? And now look at this is why, everybody, this is why I talk about displacement so much, because one displacement candle can change the entire narrative of price and what it was doing and what it could do differently. So taking into context of this, this, and how you displace through it, you just broke a multi-month base where sellers were in control, and now you flip them. And look at the weekly. Weekly had nearly a full body candle close. So yes, if we don't get continuation, I want to be a dip buyer off this weekly to potentially trade ABBV into 215, 220. I think the way, the way this month is looking, the way all these higher time frames are looking, I think ABBV wants to threaten all-time highs. You even took out a volume imbalance on the weekly, and now aggress through it. So make sure you mark this out too. So like this is very, very powerful for momentum trades because of what the weekly did in respect to what it was previously doing, right? Support, displace, rejection, 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 displace through that rejection. So that multi-month base has now found and finally broken through, and we have buyers leading the auction here. And so even if we get some kind of dip, because ABBV does like to wick out a lot, so you could get some kind of wick, and I would just pretty much like to hold this general area here to then develop and trade into the 215 plus. A huge fan of this chart just because of what it did on those higher time frames. ABT is kind of similar when I take into account the weekly. I won't talk about this one too much just because it's kind of building out really nicely, right? Except this one had a 2-year base where you saw the manipulation. So this had really nice accumulation patterns. You had the deviation, which took out, this could be your spring. You established a higher low and then you break out. And so now, once again, from this development to here, you can see the confluences of where these external sweeps are getting created, and it's off that multi-year high range again. And so I like how we're utilizing our previous highs, also known as your breakers, as a good establishment of buyers and pretty much absorbing for a good chunk now. And if and when this is ready to break out, I do think ABT can pretty much push all the way up into like the 140 range. So the weekly looks really nice inside hammer. Daily could use a little bit more, but this is a gap with displacement. So if ABT can break through 133, I would like to then see the previous month highs and all that stuff get restructured again. AAOI fits the theme of my higher low and in a potential MMBM phase. So MMBM is your market maker buy model. You have your initial higher low here that then establishes into new higher high, now back at the higher low. So can we develop to get another push higher into, the September, October timeframe? So this one's pretty straightforward for those of you who know how I trade. I do like the development that has down here. Now this would invalidate if we lose 1750, and then it would become an aggressive short back into the low 11, low 10s. This one could take time to develop though. Similar to what you did down here, right? You got the higher low and then you kind of consolidate until the next break. So you could be in that consolidation phase. If you want more confirmation, if AAOI can get above 2481 with a daily close and hold, I think it sets up a really good reversal back into the 28s and up. CMG is something I'm watching on the hourly, and the reason why, I'll go back to the weekly. So you got a really nice weekly sweep that utilized earnings and then went outside week up. You have a gap on the daily that also got wicked into, so we know what I preach about gap ups and gap downs, they tend to support. And when I go into the 4 hour, I can show you what this did here, what that wick did. So look at the confluence of the wick off the gap. So the 2 hour structure did change, right? And this is why I'm talking about those initial early reversals. You have the push down, your little push up, then you get the sweeps of those hourly highs. Look at the higher low, now higher high. So I would actually like momentum on CMG into like 44, 80, 45, then establish a higher low and continue up. So this has really good hourly reversal structures, and based off of the daily and the weekly, you put in a nice broadening low with a good gap, and now you have some nice daily aggregation here. The only thing to be cautious of is your previous lows here, which ultimately do end up being your targets. So see if we can get into that 45, establish a higher low, and then potentially try and break through the gap. But pretty good hourly reversal structures, and this would be more of a weekly trade. Another one of my favorites, and I am in leaps on this, is Webull Corporation. And it does look to be potentially setting up for those MMBMs that I like. It'd be a little bit cleaner if we go on the 4 hour here, just to demonstrate. You get the breakout, higher low, another breakout, higher low. So now we're kind of looking to see if this development can give you that straight on continuation up into the 18s. Don't really need to spend too much time on this, just the build up looks really nice. I'm a huge fan of the daily development and how we've been utilizing this daily aggression. Remember, when we have displacement, you want to utilize it to your advantage. It becomes a reference point. So how can price materialize off of it? Pretty much did the same here. Look, displacement up, you come back, rebalance. Displacement up, you come back and rebalance. So now we're looking to see if this contraction here can give us the next impulse leg up. DOCN or Digital Ocean. I like this one because you had a really nice external sweep. So these range lows here were taken out. And then I like the aggressiveness out of it. So when I take this new structural shift, because this was a lower high to a lower low, you do have your MSS that did develop here. Right, so you did get a structural shift. That was followed with a gap up in displacement, and now you came to rebalance. So when I'm also taking into account my Williams-Vix oscillator, you have confluence of a open gap, post earnings gap, paired with the market structure shift, higher low potential, and discount. So what could potentially happen if this is what is going to be a true structural change? And this is one of my more favorite charts. It's just because of the risk reward. So this could develop, and you could potentially establish that higher low to then trade back up into like 35 and so on and so forth. This is one of more of the cleaner charts that I like. Looks really pretty. Sorry, y'all. Talking just kind of dries out my throat. And that is Digital Ocean. Another one that I like, and I'm a huge fan of this one from the higher time frames, is Novavax. This just to me looks so similar to ARRY, and we pretty much came into a super strong like monthly, 3-month, yearly demand. And it's like, look at how you're compressing all of this, right? Look at how you're compressing price. You came back to rebalance, this displacement counter became a reference point, right? Look at how you came back to rebalance it. And this is a form of that three driver, 1, 2, 3. Obviously, it wasn't in a discount, unfortunately, but you did come back into a refined demand. So, like this range here, the range that caused the displacement, this becomes an order block paired with your initial displacement that did change the structure. This is still proven to be a good higher low. And now we have some nice weekly displacement out of it. So I would pretty much like this momentum to continue. And I would like to really target like somewhere in the mid 10s to taking out this 1150, although this could take some time due to the fact that this reaccumulation has been occurring since June of 2024. So this is a yearly accumulation base that I do think could potentially start to see some kind of sunshine into Q4. So really pretty chart. Looks just like ARRY. Really nice accumulation patterns. I love the fact that you have a three driver into your broadening low OB that caused this aggressive move from like 4 to 20 or whatever it was. And now you've pretty much just kind of like compressing into it. And now you finally had some first real signs of buyers on the higher time frames. Even the weekly looks really good, right? So if this weekly is going to materialize, I would like to see a dig into it that then trades out into the 11s. And some notable mentions, because that is most of the list. Some notable mentions. I do want to give a shout out to airlines. If you guys are watching anything on jets or whatever, like airlines have some crazy aggregation on the higher time frames right now. And I don't really need any of this, but you can see what I'm talking about. You're getting some really nice weekly displacement that almost took out previous month highs, right? And when I'm going to jets on the month, you're still inside. And if this does trigger, I do think it can get a run to 27, 28, even maybe 30 if it really wants to. But I would not sleep on some of these airline names. They are showing some really, really strong multi-time frame alignment and higher time frame aggressiveness. So you are getting that bit of displacement on those higher time frames. So if you see any airlines, look to see if you can get any initial retracements on them because they could be potential leaders to keep an eye on. But without pretty much extending our time limit here, I do think that will be most of the tickers we talk about. Also on watch, I guess another one is MU. And sorry, I am on the wrong one here. The one I'm keeping an eye on is MU 4 hour. And that's because the hourly structure did change here. So you go from this to this to this. So can we get a higher low potential? So I will be keeping an eye on MU as we retrace. And those areas to keep an eye on is pretty much 112 through about 116. So a $4 window to see if we can get a really good retracement into that establishes a good higher low. Because when you pair the daily, it's still within like the OB and the gaps and all that stuff. So keep an eye on MU as we start to develop into that 4 hour and the daily. You are also at a gap, and there has been some pretty good flow / positioning. I'm not a big fan of the fact that we didn't sweep those highs. So I would like this to build out and trade back into 130 potentially if the market, sees fit. Also, Netflix is a good one to keep an eye on as well. But yeah, hopefully you enjoyed the material we cover. Hopefully you enjoyed the context behind everything and why we like the trades. Please like, rate, subscribe, comment, share with all your friends, and have a great week.